So, in front of us, we have a Bitcoin chart. Um, Bitcoin is one of the easiest things that you can trade because it's paired to US dollar. It's paired to the US dollar. It follows basic fundamentals and basic technicals, as RSI, averages, MACD, the 50-day, 72-day, 200-day, 100-day, whatever you use. It follows basic technicals, basic fundamentals of support and resistance. And it's just easy to trade. I mean, you could technically, if you have, let's say, the top 20 exchanges, you can see the actual liquidity, the support lines, everything. All the data is there that you need. And like any currency, when it's overbought or oversold, you'll know. Or when it's too much speculation, like currently, Bitcoin hit 52,000. Price should retrace to 44,000 or below. As you can see down here with the MACD, it says MACD, the 12, 26, and 9. That's the MACD. The black line, or the red and black line cross, that turns the MACD negative, which will cause computer algorithms to sell off of Bitcoin. So Bitcoin will sell off. Also, the RSI is at 73. That's high. 90 to, I would say, 60, 50. Oversold would be 30 to, I would say, low 40 to 20. But currently, it's a lot of speculation. The price is starting to sell off. Once the MACD crosses over into negative territory, then the price will fall to 46, 44, depending on if the blue line, which is the 50-day moving average, pulls up higher. If it pulls up higher, then the price might sit on top of that, or depending on how hard people sell off, it might fall under, like in before February here, where you see price at 40,000, sold off hard there. You can basically see the same pattern of the MACD crossing over into negativity and then the price falling. It's the same pattern. All algorithms use this same pattern. They also know that price usually retraces back to the 50-day, or depending on if it's what the averages are doing. You might have a golden cross, death cross. Now, if you're a swing trader, you're watching this. If you're a day trader, this isn't too important to you, because you already lost your money. I don't believe in day trading. But for the most part, when it comes to trading cryptos, there are only a couple cryptos that you can actually trade. The rest of them are just manipulated by the exchanges, by the project teams and devs. They're just manipulated. There's no real point of trading them. Like, if you give me a brand new currency with a market cap of 200K, there's zero reason that you should trade that. If the projections are that this coin is going to integrate within, 10 different user bases, then you know that they're going to adopt those retail, and the retail will buy it, and then it'll go up in price regardless. So if a coin has $20 million in VC funding, and you buy it before, you buy it on the first exchange, then it lists on 10 other exchanges. Then, you get your 100%, 200%, 300%, and you get out. No technicals needed, no fundamentals needed. And that's just the way it is. Then you have the teams. If they have, let's say, a $2 million market cap, and they have $20 million in VC funding, they might put $100,000 at a certain price point, which causes the price to push up higher. So they're able to manipulate the price up and down and trade within that range for themselves. It's a lot of manipulation. It's a lot of insider trading. It's a lot of BS when it comes to cryptocurrencies. But once you get to certain market caps, like in the case of Bitcoin, $500 billion or $1 trillion or $100 billion or even 50 billion, it is technically kind of hard to manipulate those prices because of the amount of money that it actually takes to manipulate those prices. But if you're like BlackRock, or let's say Microsoft, Chase, then you probably could manipulate the price. But with the introduction of the exchange traded product, or the ETF, which people call it, which is actually the correct or the incorrect term for it, is actually called a ETP. With that introduction, they will get inflows of cash where they have to allocate to Bitcoin. So, that 15K, 20K, if we ever see that again, is highly unlikely. But if we do, would be an indication to get in for myself, to fill my bags up. But just imagine you have these 401ks that are buying the BlackRock ETP, and then BlackRock has to allocate those funds to Bitcoin over and over and over and over and over. Eventually, you get an inverted price. There's no way to stop it. So yeah. But yeah, the price should go between 46 and 42 soon. You have to be patient with these kind of things. People are always in a rush. They want things to happen tomorrow, today, and it takes time. It'll take a little bit of time. The momentum has to come out of Bitcoin. Once the momentum comes out, then the price will fall. Personally, I don't trade futures when it comes to Bitcoin because of the exchanges. They technically don't want you to make money. So, they can bump the price up, they can crash the price, they can do whatever they want to do. It's not regulated. And technically, if you're in the US, you're not really supposed to be trading futures. So, futures of Bitcoin. Personally, what I'll do is, I'll trade within my same bag. I'll wait for this price to come down. So I took profits, wait for this price to come down, buy it again, wait for it to pop, and do it over and over and over. And I've been doing basically the same thing for 2014. 2014. Got in 2013. But yeah.